Joining us now, Craig Irwin, Managing Director, Senior Research Analyst at Roth Capital Partners. Craig, always good to have you. First, just give me your take on the delivery numbers.
Small miss. I mean, single digits, mid-single digits, thousand miss. I don't really see deliveries as meaningful right here. We had a big pull forward in 3Q, and the more important data point in the release is the mega pack. 14.2 gigawatt hours versus 12.5. We probably have a revenue beat at chunky 30% gross margins, which means this quarter is probably a gap beat. And that's really what people should look for going into the actual numbers at the end of the month.
So they continue to that part of the business continues to grow quite quickly. Energy storage.
Yeah, storage is going gangbusters, as you would expect in this utility environment. You know, data center is red hot. The grid is stressed all over the country. Corporate utility customers want whatever they can get, and Tesla's an obvious beneficiary.
Well, you know, the cynics would say, yeah, anything to distract from the fact that they sell fewer automobiles than they did a year ago. You know, should that not be a concern?
It's a big concern. It really is a big concern. So consensus right now is for about 100,000 units more sales in 26 than 25. And a trend's your friend. I think probability of us continuing to see a contraction in EV sales is relatively high. It'll be a function of what they do around price and whether or not they're able to successfully keep selling their cars as they decontent them to bring down the ASPs for the average consumer. But yes, it's real risk. And you know, there's a halo around a lot of the other pieces of the business model, but we definitely need the cash flows and the revenue from the core automotive business.
Well, I was going to ask if the inflection point is coming soon enough from the other more exciting growth businesses when it comes to actually monetizing them to make up for now these shortfalls on the cars.
Yeah, so the storage business has obviously made up the shortfall, I believe, for this quarter. Probably about a $450 million uplift, right? So that's already there, and storage is red hot. The other businesses that I think are a much bigger piece of valuation are obviously the cybercab or robotaxi or whatever we want to call it these days, and then Optimus. And, you know, robotaxi, you know, is very much a story line at this point with limited deployment, right? When are they going to get to 1,000 units in the Bay Area or 500 units in Austin? You know, they only just took the chaperones out of the cars in Austin for testing, last week? It was expected, it was in line, but they need to get them out of the cars. I mean, I don't really care if they have these what do they call them? The teleoperation engineers behind the cars. I mean, that's for safety. Obviously we want zero risk with these vehicles, but they need to keep making progress there. And I think that's going to be the biggest piece of valuation at 26. And then Optimus is kind of like cake dressing at this point. You know, it's something that has tremendous opportunity, but you know, the robotics stuff. Let me just say, I'm hearing competition out of China is insanely intense, and most of the supply chain is actually reaching to China. So, you know, companies here, I don't think are doing anything too differentiated from what's already being done in China.
From what the Chinese may be able to do. You know, a lot of it obviously comes down to what those hands can do. Pretty incredible to watch them. But on that note, then. So it's going to be, in your opinion, and I think you have a price target that's at least $50 or so from here, but it's going to be the metrics around robotaxi that kind of are key for a lot of investors, because we're going to put to the side whether they're selling more automobiles or not year over year.
Well, it's going to be the balance between auto and storage, right? Can storage at 30% gross margin, phenomenal gross margins, right? Can that continue to offset the flagging growth in automotive, right? 16% year over year decline. It's hard to wipe that away. But if storage is doing it, that's fine. You know, then the story side becomes, okay, storage is awesome. What's the future with cybercab and Optimus? And that's what everybody's dreaming. I mean, the supply chain, Tesla's told the supply chain they want to make 30 million of those robots. That's nuts. I mean, that's
yeah. Well, he talked about 1 million by 2030, I think, is what I remember him telling me the last time we talked. Musk, that is. I would assume the preponderance of the conference call a month or so from now, or when they have it, is going to be around these themes and not necessarily about EVs, right?
I think everybody's going to spend time on EVs and look to understand EVs, and Tesla's going to take market share in EVs, right? As everybody else is retrenching from the market. Their biggest competitor right now is BYD. BYD is getting bigger than them. But Tesla has these incredibly interesting, hyper growth opportunities and is executing well on its growth business that's emerging. So, I don't think people are going to be too upset by a tiny miss in EVs.